Hi, I'm Rob.
And I'm Rob.
And I'm Russell.
And this is Ask Rob and Russell.
Yeah, get into the flow of this now. We've got these special episodes where Rob and I are joined by Russell Smith, tax extraordinaire from the Property Hub Tax. Yes, he's been bringing his knowledge over the last few weeks, and there's more to give. So we've got two more tax questions for you this week. Tax knowledge bombs going off on the show at the moment. Absolutely brilliant. But we know it's what you want, so that's why we're giving it to you. This week, we've got two great questions, but before we answer them, let's give you a reminder of how you can get on the show.
Yep, dead easy. Just give us a call, 013 808 00035. That's 013 808 00035. Or you can get on your laptop and head over to thepropertyhub.net/ask. All you need to do is leave us a quick message and wait patiently to receive your answer. That is what today's first questioner did. So let's have a listen to this one from Dominique.
I wonder if you can help me with some tax issues that I'm having a bit of trouble understanding. I work full-time and self-employed. I have my own limited company, so pay corporation tax. And as a sideline, I have 6 buy-to-let properties and I pay self-assessment tax on those. My accountant does all of my accounting together, and I find every year that I pay more tax for my buy-to-lets than I do for my day-to-day work, despite the fact that I earn a lot more day-to-day than I do with my buy-to-lets or on my buy-to-lets. Now, I understand why that is, because corporation tax is at a lower rate than other tax, but still I'm a bit confused because the draft that was done by my accountant this year, he's based it on £10,000 rental income, and my self-assessment tax is going to be £30,000, and I just wonder how that can be, and if that is going to be the case, then clearly this isn't a viable sideline for me. I don't really want to give up on it all because I'm 50 years old and this is my pension plan, so I do want to persevere, but at that rate of tax then clearly something's going wrong. I wonder if you could explain that to me. Also, I wonder if you could explain the on-account tax that we have to pay. So apparently I have to pay a certain amount on account in January and the same amount again on account in July. And this is a good thing, I'm told, because it means I'm making advance payments, so I'm always ahead of the game. However, I do this every single year, so for me it doesn't make any difference if they're going to keep taking it in advance. I never catch up.
Well, thanks, Dominique, for this question. I mean, I love this question, Dominique. It's great to answer. Unfortunately, it would be so much better if I had your tax return information ahead of me so I could actually really get into the nitty-gritty of it. But I'm assuming you don't want your information read out on a podcast. So actually, I'm going to do my best to try and answer this kind of overall. So essentially, what you're saying is you don't really know where your tax is coming from. So because it potentially looks like that your 6 buy-to-lets tax is higher than your limited company tax. So I'm going to do my best to try and work out what's actually going on here. Okay, so the first thing, the two real key points here. You say that in the limited company you're paying corporation tax, which is absolutely true. So in your limited company you have your turnover, your sales, minus your expenses equals your profit. Your corporation tax currently at 19%, although in the year you're probably referring to it was at 20%. You pay corporation tax. Of course, in the new tax year, so the one that's just gone, so the 16-17 period, if you took money out of your limited company, which I'm sure you did, then you pay dividend tax, which is income tax. So it's not quite true to say that you're only paying one set of tax in a limited company. It's corporation tax and potentially income tax. I say potentially, I mean you will be paying dividend tax. Dividend tax is, the first £5,000 is tax-free. You've then got 7.5% tax up to the higher rate, which is roughly about 45,000, and then after that it's 32.5%. So I don't know how much you earn or how much income tax you're paying, but I'm sure that in your activities of the business you'll be paying corporation tax and the dividend tax, which is essentially income tax. That's the first thing I'll say. The second thing I'll say is, with your income, it's a bit like a tower, okay? So at the bottom of the tower is your business income, your limited company income, and your property income from the buy-to-lets you have sits on top of your limited company income. Now, why is that important? It's important because I suspect you are paying dividend tax at the basic rate of income tax, and you may be paying property income at the higher rate of income tax. Now, the higher rate of income tax on property is 40%. So it's very, very likely that that's what's going on. So when you ask me, am I paying more tax on my property income? Potentially yes, because the percentages are so much higher. So that's two things to remember. Number one, the business income has two types of tax going on. And the second thing is you may be paying a higher rate of tax on your rental income. So have a look at your tax return and see if that's going on. Now let's look at this payment on account situation that you've mentioned. Now payments on accounts, evil things, guys, not so great. What this essentially is HMRC saying, wow, you've earned £10,000. We're going to charge you £10,000 tax. I want £5,000 extra for next year. Now, after that, it only happens once really, because then you pay payments on account every half a year, which probably makes your tax bills easier to pay. But in the first year, and by the first year I mean your income tax is going over £1,000, potentially you have got £1,000 plus 50%, so £500. So on your tax return, I suspect, Dominique, sadly to say, you're actually getting a payment on account there as well. So you may be paying a 1.5 year tax in one go.
Brilliant. Thank you, Russell and Dominique. Hope that was helpful. Now let's hear our next question. This one is from Mike.
Hey, Rob and Rob, it's Mike here. I love this show. I've got a question for you about the new stamp duty changes, the extra 3% in the UK on additional property. Specifically, if you were to own all property through a limited company, so as investment, and personally you don't own any property, so you're either living in rented accommodation with family, when it comes to buying your first property personally to live in, are you still liable for that extra 3% or not?
Well, hi, Mike, and it's a really, really good question about stamp duty. So as you probably know, stamp duty, the additional rate of stamp duty was introduced a year or so ago, 3%. 3% extra. Now that's 3% on top of the current stamp duty. So it meant for most people they would actually pay a lot more stamp duty. The 3% would come in basically for landlords or buy-to-let investors. If you had another property, you would pay the 3%. So if I live in my property now and I want to buy a buy-to-let, I'm going to be paying an extra 3% on stamp duty. Now essentially I think your question is, yes, that's the case for individuals. But what if I buy it in a limited company? Fortunately, the quick answer is no, 3% in the limited company as well. The stamp duty regime came in for individuals and limited companies. So it's all the same stuff. And in a limited company, you don't get that first property free. So essentially, because a limited company can't really live in a property, you don't get that kind of primary residence rule which says you don't, it's not the second property. People often ask me, if I buy one property in a limited company, will I pay the 3% stamp duty because it's just the one property? Unfortunately, the answer is yes. So sadly to say, Mike, yes, that 3% is going to hit you either way, whether it's individual or limited company, and whether or not you've got one or two properties in your limited company.
Well, once again, thank you, Russell, for sharing all that knowledge. And thank you to everybody who keeps submitting questions. We'll, of course, be back next Tuesday with Ask Rob and Rob, and probably Russell. And you already know by now, without fail, we'll be back on Thursday with the Property Podcast. So until then, take care. Bye-bye.